Hello and welcome to Money Talks. I'm George Pitcher and you're Edmund Shing, BCS Asset Management and author of The Idle Investor. Welcome, Edmund.
Thank you,
Now,
George.
you've written your column for us on IBTimes UK this week on a sort of apology for deflation. You're trying to rehabilitate deflation. But what I don't really understand, I have to say to you, Edmund, is that inflation is also a bad thing, isn't it? So
that's right. I mean, I think of it, if we go back to sort of Greek mythology, like Scylla and Charybdis, Odysseus is trying to navigate between the two dangers. And here we have deflation on one side, which is generally prices going down, and that usually happens when the economy is going into reverse. So that's why we don't like deflation, because it usually means the economy is going down at a rate of knots. Unemployment's going up, everyone's suffering. Of course, no one likes high inflation either, George, because of course that means prices are going up very fast. And so our money's not worth as much day by day.
I see. And so who is deflation good for and who is it bad for?
Well, there are different types of deflation, George, just to complicate matters.
I was afraid there might be.
Yes, exactly. So in Japan, for instance, in the 1990s, you had bad deflation where prices kept on going down and households and consumers just stopped spending money, because they figured, why buy something today when it's going to be cheaper tomorrow? And that's the problem for deflation in the economy. In the UK today, we have high street prices going down by 1.2% per year. So Christmas presents this year will be cheaper than they were at this time last year. But that's deflation. It's also, however, good for household spending because we can buy more for our money, and we're very lucky because this is happening, George, at a time when the UK economy is growing at 3% a year at a good rate, which is quite rare.
I see. So where are the opportunities for the investor who might want to take advantage of a deflationary environment?
Well, clearly not shops, because high street shops and supermarkets, and as we know with Tesco and Sainsbury, they have intense pricing pressure, and that's hurting their profits. So where I would rather look at what we call cyclical sectors, sectors that are tied to the fortunes of the economy, and in particular those which also benefit from lower oil prices, because of course we know oil prices have come down a long way in the last 3 months. My favourite sector at the moment in the UK is airlines, particularly low-cost airlines, Ryanair and EasyJet, because on the one hand, their fuel costs are coming down, and on the other hand, their passenger numbers are going up, because people like a bargain and their flights are relatively cheap. Otherwise, the other area I would look at would actually be outside the UK. I would look at Germany as a country, because actually, they don't have any oil companies. So their stock market is not dragged back by the underperformance of oil companies, and rather is being boosted by these cyclical sectors like car makers, like chemical companies, and industrial companies like Siemens. And I think that has already performed very well, but I think this market still has quite a way to go in the next few months.
Well, thank you very much, Edmund. So there we have it. In a deflationary environment, when we're deflating, there are opportunities for the shrewd investor. I think you were saying in Greek mythology, but to look between the rock of inflation and the hard place of deflation for those opportunities. And if that fails, Germany. Thank you very much, Edmund. Look forward to seeing you next time, and look forward to Money Talks with you next time too. Bye-bye.